In the gold rush of artificial intelligence, everyone is looking at the brain. We are obsessed with the processors, the GPUs from NVIDIA, the TPUs from Google, the neural engines that crunch the data. But there is a fundamental problem that few people talk about. As these electronic brains get bigger, more powerful, and more complex, they face a bottleneck. It doesn't matter how fast your brain is if your nervous system cannot transmit the signals. Today, we are going to talk about the company that builds the nervous system of the modern semiconductor industry. A company that sits quietly in the background of the AI and autonomous driving revolution, ensuring that the billions of transistors on a chip can actually talk to each other. That company is Arteris, ticker symbol AIP. We have analyzed their financial journey from their IPO era in 2021 through the market correction of 2022 and finally to the accelerating growth signals in their latest Q3 2025 report. This is a story about the interconnect, the invisible infrastructure of the Silicon Age. Let's start with the basics. What does Arteris actually do? They sell system IP, specifically network on chip, NoC technology. Think of a modern system on chip, SoCs, like a bustling city. You have the CPU, the GPU, the memory, and the AI accelerators. These are the buildings. Arteris provides the roads, the traffic lights, and the highway system that connects all these buildings. Without Arteris, the data gets stuck in traffic and the chip fails. Back in 2021 and 2022, when Arteris went public, the market was in a frenzy. The company was growing, but it was also burning cash. They were investing heavily in R&D to broaden their portfolio, acquiring technology to handle not just the connections, but the entire assembly of the chip. In their 2021 and 2022 1OK reports, we saw rapid top-line growth, but also widening operating losses. The market, fearful of rising interest rates, punished high-growth, unprofitable tech stocks. Arteris was no exception. However, while the stock price was volatile, the fundamental business was building a massive moat. As we moved into 2023 and 2024, the semiconductor industry faced a cyclical downturn. But Arteris showed resilience. Why? Because chip design doesn't stop during a downturn. In fact, it accelerates. When the market is tough, chip makers invest in R&D to be ready for the next boom. They need Arteris more than ever to manage the exploding complexity of their designs. Now let us fast forward to the present day, late 2025. We have the Q3 2025 1OK report in front of us. And the data tells a story of a company that is turning the corner. Let's look at the annual contract value, or ACV, plus trailing 12-month royalties. This is the most critical metric for Arteris. It represents the recurring value of their contracts. In the third quarter of 2025, this metric reached record highs. This confirms that despite any macroeconomic noise, the adoption of their technology is accelerating. The driver of this growth is twofold: AI and automotive. First, AI. Generative AI requires chips with hundreds of billions of transistors. You cannot wire these manually. You need an automated, intelligent interconnect. Arteris' Flex NoC and Core products are becoming the standard for these AI chips. Second, automotive. Cars are becoming supercomputers on wheels. They need central brains to handle autonomous driving and infotainment. Arteris has a dominant position here, working with leaders like Mobileye and many others. Let's dive deeper into the Q3 2025 financials. Revenue is steadily climbing. For the quarter ending September 30th, 2025, revenue increased compared to the previous year. But what is more important is the mix of that revenue. Arteris makes money in two ways: licensing and royalties. Licensing is the upfront fee engineers pay to use the software. Royalties are the small checks Arteris gets for every single chip that is manufactured and sold. For years, the story was all about licensing. But in 2025, we are seeing the royalty engine starting to rev up. As the chips designed in 2021 and 2022 finally enter mass production, high-margin royalty revenue is beginning to layer on top of the licensing base. Margins are another bright spot. Arteris is a software and IP company. This means they have incredible gross margins. In 2025, their gross margins remained roughly 90%. This is elite. It means that for every extra dollar of revenue they bring in, 90 cents goes to cover their operating costs. However, we must address the risks. The company is still in the investment phase. If you look at the loss from operations in the 2025 statements, they are still reporting losses. They are spending heavily on R&D and sales to capture this once-in-a-lifetime AI opportunity. They are prioritizing growth and market share over immediate profitability. For conservative investors, this cash burn is a risk factor. But the balance sheet remains healthy, with sufficient cash reserves to fund their operations as they march toward break-even. Another crucial aspect we noticed in the 2024 and 2025 filings is their expansion into SoC integration automation. With their Magellum product line, they are not just connecting the IP blocks. They are helping engineers assemble the entire chip faster. This increases their stickiness. Once a chipmaker adopts the Arteris workflow, it becomes very difficult to switch to a competitor or go back to doing things manually. So, what is the verdict for the long-term investor? The semiconductor world is entering an era of hypercomplexity. Moore's law is slowing down, so performance gains must come from better architecture and better interconnects. Arteris is the pure-play bet on this trend. They have survived the tech crash of 2022, they have navigated the inventory correction of 2023, and now, in 2025, they are riding the twin waves of AI and automotive electrification. The thesis is simple. If you believe that the number of complex chips in the world will increase, then you have to believe that the demand for Arteris's IP will increase. They are selling the picks and shovels for the chip design revolution. The shift from low-volume licensing to high-volume royalties is the catalyst that could drive significant operating leverage in the coming years. The nervous system of the AI world is being built right now, and Arteris is the architect.